Hi everyone, today it's Kaef Pharma. This is growing pretty fast, 54% in the fourth quarter, 32% in the first quarter after they acquired one of their subsidiaries last year. So quite a big ramp back up in sales growth. It's coming from, or at least in the first quarter, from the generic and the OTC, which are growing at 68%, 59%. It's this one that has really ramped up to a new level in the last year or so. There you can see. Whoop. Anyway, so we're going to assume that, because we don't really know what the underlying growth rate is, but we're going to assume the trend continues flat in the second quarter and then rising again, and that is 9.9% growth for the next 12 months. So in cash flow, this is excluding the working capital. So the cash flow has been, well, they made this acquisition last year. So that's bumped up the inventory level and also the investment spending. So by last year, the cash flow was minus 2.2 trillion. That's now turning around a bit, started to come back up to minus 1 trillion. The working capital is becoming a lot less negative. It's been negative all the way, so this is like inventory build-up mostly since 2015. It's pretty amazing. So that may start to add back. Even without that, we get a small positive 191 billion cash flow in the next 12 months, which looks like that. So in the balance sheet, they've gone all the way from net cash. First quarter is the lowest, minus 7 trillion. It hasn't helped that they have paid out almost $500 billion in dividends. But anyway, with our cash flow and assuming no dividend, the net debt would come in a little bit in the next 12 months. In terms of profit, so profit is quite small. Hasn't grown year on year, but that's because of this FX loss. So actually the cash cost, which had deteriorated, has come back up to the long-term average 95%. And we're using this 95% to forecast a pretty big jump in net profit up to 375 billion. So in terms of valuation, that's the cash flow, assuming quite low investment spending, using 1.6%, and then a 30% discount is pretty generous given that the debt is so big. Anyway, that gives us a target price of just over 1,500. So interesting story from a sales perspective. Let's see what impact that has on the cash flow. If the inventory starts to come down, it could be a lot stronger.